Testing, testing, testing. All right, let's get this rolling. Hi, everybody who decided to join here last minute. Let's see if let me share with everybody on Discord real fast. All right, let's get to it here. What's going on, everybody? Yeah, things are selling off. RIP Celsius. I just saw that. It's kind of why I went live. I haven't gone live in a couple months. It looks like I did a couple of update videos. I'm gonna try to start going live again Sunday nights after market open, looking at the broad markets open and getting back into the groove of things because the bottom is incoming. Hopefully, in the next couple months, I want to be on top of it. Been kind of quiet lately because I was getting myself positioned to buy the heck out of this next dip and just kind of mentally resetting and adjusting my rules because there are some things that I think that we could have done better this whole market cycle. So I've got all kinds of really cool updates to share with you guys. Been doing a lot of research on some projects that I think are going to do well in the bear market, but especially ones that I can keep a close eye on their adoption metrics, and I'll be able to buy the dip on some of those. So yeah, let's see what we got here. RIP Celsius, indeed. Let me throw this on Twitter real fast, everybody. I'm sorry, I'm a little bit discombobulated getting back to doing lives the first time in a long time. Did I throw that on Twitter already? Yeah, okay, it's on Twitter. It's just gonna get slow going. All right, so real quick, what I wanted to do was, so first of all, again, apologies for not having done anything for like over a month. I'll share with you a little bit of personal stuff that's been going on. My son started daycare, let's see here, at the beginning of May, and he was nonstop sick all of May, basically. So I had to just deal with, well, not I had to, but he was just nonstop sick, so we had a lot. And he brought home a lot of stuff, made us sick. I just got over a torn cornea in my eye. That was last Friday, and it was just pretty terrible pain, and I couldn't stand any light. Basically lived in darkness for about 2 or 3 days there. That's healing up pretty well finally now, and there's just been a lot of personal stuff going on. But we're gonna get back at it. I mean, I did this last time when there was a big market sell-off, right? It's kind of like, I know, like, if the sell in May and go away works every time, you know. Chainlink looking good relatively. We'll look at that, I guess. But you know, it's always true. Whenever you see weakness in May in the markets, like a little bit of a top, that's just sell and enjoy your summer and come back refreshed at the end of summer. That's what I do every time. I did it in 2020. I did it again here. Obviously, I want to talk about a lot of the things I did wrong, where I could have done so much better. But you know, revisionist history. We can't look backwards. We have to look forward. So let's look at what mistakes we made in hindsight, with the purpose and focus of improving in the future. That's all we can ever do. All right. If you have coins on Celsius, how likely are they at risk? Jordan Q. In my opinion, I have a handful of Ethereum still on Celsius. I will try to get that off here this week sometime, whenever they open exchanges back up, or whenever they open transfers back up, if they do. You know, I don't know. After the Luna thing, I thought when Luna depegged, UST depegged it first, I thought it was going to be a couple of month problem where the initial tag happened. They were going to have to burn a lot of their Bitcoin that they just bought to repeg it, and they're going to slowly drain all that Bitcoin off as people left the ecosystem, and then there would be a big collapse. The fact that Luna kind of everything went off the rails as fast as it did, in that coordinated manner, I don't have a good sense of how anything else is going to hold up, to be honest with you. It's my opinion. This is my last video I think I put out was it's Bitcoin season, and in my opinion, as long as it's Bitcoin season, just buy and hold Bitcoin and hold it offline mostly, and that's about the only way to go, in my opinion. Like, there's no no point in trying to mess around with risky exchanges or risky in the bear market. It's just not worth it. All right, so what we're going to talk about here with this chart. So Celsius that's not looking good. So yeah, and also again, my son's been sick nonstop, so my wife and I are both also getting over whatever the latest crud is that he brought home. So if I'm sniffling a little bit, I really apologize. But I wanted to get back to doing lives. I'm excited for the Bearcoin alt market list. Yeah, so yeah, I am too. I will tell you, so far, I found a few projects that are these like what I will call interchain or multi-chain dedicated projects where they're interchain routing type things that seem pretty good. A lot of it's metaverse related, and a lot of it is with projects building on within ecosystems that you will know well. Mostly, like Cosmos ecosystem had all these projects spawn off of it a long time ago, but Cosmos never really saw the benefit of that. So Polkadot and Cardano and Avalanche actually too has there's some things building on all three of those that have some really interesting use cases. That's what I'm deep diving into the most. What I'm trying to sift through is out of say 20 or 30 I've identified as really interesting potential. I'm trying to find my 2 or 3 favorites in each kind of niche category I'm looking at. One being the interchain story, one being upstart Oracle spaces, something to compete with Link maybe, that do things a little bit differently. Another being metaverse related, and then some gaming related ones. And then another theme. What was the other theme? I forgot the other theme I was looking at. Those are the kind of the theme. There's another theme I'm forgetting it right now off the top of my head, but those are the major themes I'm looking at for the next bull market cycle. And the DAG space, right? So the layer 1 DAGs and the multi-chain DAG. So layer 1 DAG, my favorite DAG currently, it's kind of smaller, is I've already put this one out there, A0. Been accumulating that one slowly. And then AVAX is the other, obviously the big one. Everybody knows about AVAX. So there's no other new layer 1s I'm really looking at with all seriousness right now. I think the layer 1 space is pretty well cooked. I'm only interested in like these Uber layer 2, layer 3 interchain or very large aggregators, and then all the other themes building on these other projects. So I put together this model here. Let's see here, Chainlink here. I put together this Bitcoin model. Obviously, everybody knows this. You've all seen it a million times. The only thing I added in here was because the next thing staring us in the face is, in my opinion, obviously, clearly we're in the bear market. The November top apparently is going to be our market top this cycle. And the reason I say that is because we're getting close enough to the halving date that in past quote-unquote cycles, I've always said, for me, the cycle was rooted at the center of the halving, more or less, right? The low was nearly equidistant from the halving as the high was almost every time. Maybe not exactly, but pretty close, right? Relatively speaking, let's just take a look at that. That was 539 days from the low to the halving and 532 days from the halving to the top. 518 days from the bottom to the halving and 546 days from the bottom to the top, right? So we've gone from the bottom of this 518 days, we went out 546 days to the November top. So this appears to me to be the top, clearly. Now, I did place a wager with Heath that we would make a new all-time high before the next halving. I think I'm going to probably lose that one. I think we're going to get back a lot closer in this bear market. What I see changing is this is a very diminishing returns market, but the fundamentals and everything still stack up to be very strong to me, and I still expect this spot ETF to be approved, and that's going to give us a lot of tailwinds coming into the halving. So I think we're going to have a bigger ramp and a forward pricing of this halving. So we might tip a new all-time high right before hitting the halving or something like that. You can see the bear market low run up into the halving is still pretty substantial. If you look at the bear market low in 2015 to the halving, the price at halving was 319% gain from the very bottom tick. A little bit higher than 319% if you take it to the top tick, but I'm taking it from open price at the halving, from the lowest price to the open price at the halving. And then the lowest price in the 2018 bear market into the 2020 halving was a 200% gain. So I still expect, I've got marked on here for us to have a 70% correction from the November high. Obviously we had greatly diminishing returns. Let's shrink this all down here. Greatly diminishing returns. Instead of 9,800% or 2,800%, we had 739%. And so I would expect the drawdowns to continue to diminish as well. I guess our worst case drawdown is bringing us right back to the prior all-time high. Let me just mark that on here. I'm not necessarily expecting that, I'm not saying it's not going to happen. The reason I had it drawn a little bit higher was that was my target anyways, what I think is a fairly safe target of accumulation. But realistically, it's probably going to come back and hit the prior all-time high. It's quote, never has happened before, but a lot of things haven't happened before that happened this cycle. So if I were to readjust my pricing here for the worst case scenario, about $20,000, right? If we hit $20,000, hopefully we don't close below that on, say, a weekly or monthly basis. Daily basis, we very well might. I'm not going to overreact to it, but couple weekly closings, a monthly closing, we'll see how fundamentals look. But anyway, that would be a 70% drawdown, right? So back to the prior all-time high. I think we get a higher baseline here, and then we put in a nice 150%, say, run to about $50,000. You can see I've got basically anchored at that swing high right there. It's to barely hit that last swing high, barely take it out, and then for a little bit of a correction into the halving, and then off we go. Something like that. I could definitely see us actually, making our way and making a new all-time high coming into the halving, and then a little sell-off post-halving. It'll be a little bit backwards, throw some people off. This is kind of what I'm looking for. And just looking at everything, obviously, clearly, we're so close now to the 200-week MA that I've resigned that we're going to trade below it for a couple of weeks before we, actually get our final bottom and start to resume upward. So that's just what I'm looking at right now. And this obviously coincides with the macro story. Let's take a look at the broad markets. DXY strength, I did tweet that, and I saw some people putting out that this looks like a top. I said I don't know about that because it's in a very strong uptrend, and just by the way that I analyze the market. Let me go throw back on here some of my other moving averages. I had turned some off. I was really focused on the 111 lately. So I'm going to stay focused on the 111 really is my main anchor, but the 50-day obviously. But if you look at the DXY, I've got a weekly chart up here. It never really got significantly below the 50-day moving average, and it just kept trucking its way up. And I got this breakout, parabolic trend line, and obviously we came into resistance. This is kind of historic resistance, especially this swing high right here. Throw that on there for you. So as we came into that resistance, I said, look, yeah, I see everybody saying that we came into resistance. I said on this side of this sell-off that we're coming into resistance. It's probably going to go ahead and roll back over. That's what I was thinking. That the Fed was not going to be as drastic as they ended up being. But when I saw it bounce off of this, it never really broke down this parabolic trend line. That's when I said, you know what, never mind. It looks like it's consolidating under resistance to me more than it looks like it's going to want to roll over. So we closed meaningfully below. You see the weeklies. It never really convincingly closed below the 50-day moving average for that matter. And it never broke this kind of breakout trend line. So in my book, it was just consolidating under this resistance area, and it's wanting to, do that consolidation below and break back above it. So that's what I think is going on here. I think we're headed for another 0.5 interest rate hike. So if the interest rate hike is indeed another 0.5, expect market weakness to continue. My target used to be this area that we're in right now was my original sell-off target when we lost that uptrend. I don't know if y'all recall, especially on the NASDAQ, I was looking at this right there. I had this ascending wedge pattern on the NASDAQ, and I said, hey, should we get the ascending wedge pattern? This is exactly my area with the target. And the NASDAQ chart started to show a descending wedge, and I thought maybe we're breaking out of that. But that really bad CPI print last week just was kind of the nail in the coffin. So it looks like we're just going to continue this pattern on downward here for a bit. So these were my targets originally, this range and that range there on the SPX. we'll see. The 200-week moving average, speaking of 200-week moving averages, happens to be around 3,500. I did tell somebody recently that I thought that 34, this prior all-time high over here, 3,400. I feel like 3,400 SPX is probably max pain politically for the Fed and people that want to get reelected. I think that they'll have to reverse course right around the 3,400 because it's going to be making enough headlines. But we'll see what's the greater evil. Is it still inflation by that point, or is the pain, the perception of pain in the markets? Now, obviously, the only people really hurt by this, broad market equities markets coming off like this are people who are close to or in retirement that still have their money in equities, or people who work on Wall Street, so or day traders or whatever. Well, I guess day traders probably be fine. They're probably playing this on the downside, but but there's only a handful of people that really care about this number. But it makes news, and people see especially the Dow Jones is the one that you see on the TV all the time. That thing makes it down 28,000, closing that gap at 28,000 was kind of like my max pain target there as well. Obviously, we have that gap right there. So close this little gap here at 28,000 on the Dow Jones, which is again what the news always likes to make light of. Whenever you listen to the talking heads, they're always talking about the Dow Jones for some reason. So we'll see if we can hit that region. Anyway, but if broad market weakness, we get to those levels on the broad markets. Crypto is a speculative asset. It's going to continue to be risk off. And I was exceptionally bearish recently on all altcoins. And I said, I had said before, I don't know if anybody caught RUM, anyone? I'm not drinking rum because I'm still getting over being sick myself. And the wife and I, actually our 17-year anniversary was yesterday. And we had a babysitter lined up for 12 hours. We were going to go down to the beach and do some things and go to dinner. And our day got totally ruined. We just went downtown to the museum and saw the Pharaoh, the Ramses exhibit, and went to an early dinner. Thought about seeing Top Gun, but the theaters were all full. So we went to an early dinner and came home and didn't drink anything. It's pretty miserable. But a couple nights before that, we went to a wine tasting, which really set us both off. We were totally miserable after drinking just a little bit of European wine, which is not good. Is Bitcoin taking out this low? It just did, didn't it? Yeah, so Bitcoin took out. So look for a bounce now that we've taken out this low, very short-term bounce. And I'm not actively trading any of this, right? I am totally, per my rules. When we lost that 34,000 level, I just kind of closed up shop. I'd already when we hit this 50-day, this little move right here into the 50-day, if y'all remember, I got pretty risk off over here. Got risk on back. Let's share with you what I got risk on back through here, right? Trying to play the bounce off of these moving averages and these levels. And then re-risked off as we rotated back under here for what I had bought into there. So I took some stop losses and some leverage trades, and then that was my last attempt ever at leverage trades. I have taken no leverage trades since those two over there. That I did by spot, which I got out of over there, and then I got out of a spot over here again. I bought 37,000-ish, and then I got out. I didn't like this pop, and it's rolled over since then. I've just been watching. I did try to buy, I think 35. Right as we came in at 34,000, my invalidation level, I bought right above it, right here, to see if we got a bounce, and then I just closed it right as we rotated. So I've been totally just chilling since we hit my $34,000 invalidation level. I've been doing a whole lot of nothing but watching the market. Where was I going with that? So we took out this low. Yeah, I mean, this probably is going to give you a little bounce once you hit that liquidity. You're going to get a little bit of a bounce there, I would imagine. I'm not playing it. Point is, since this level right here, I'm chilling until we get these moving averages back. Why do you use the 111 moving average? David, if you were around, I don't recall if you were around watching when I was doing most of my videos in 2020-ish. I explained my strategy was rooted at really the 120-day moving. The moving averages are my lifeline. This is how I gauge momentum in the market. And if the moving averages are prices above the moving averages are trending upwards. Typically speaking, you'll see me buying into support as price retreats into those moving averages and horizontal support around those levels. And then I'm looking to play that momentum. So I'm basically buying a dip in an uptrend, right? If the moving averages, let's just go show you why I use it. I'll just try to make this very crystal clear. I'm actually going to remove all these drawings. Just move everything. Get rid of this. Get rid of everything but the 111. And that was the 120. I moved to the 111 from the 120 because the Pi cycle indicator uses the 111. And I like to use indicators that are self-fulfilling prophecies. And so a lot of people are going to be watching the Pi cycle, which is the 111-day moving average. A lot of people are going to use that moving average. So I'm going to pivot from the 120, which is what I've always thought was real accurate, to the 111 because just more eyes are on it. Now I use it differently than other people, so that's my kind of edge, right? How I use it's different than other people. People try to directly trade around it. They try to buy, daily closes above it or sell daily closes below. I don't do any of that stuff, right? I just use it as a momentum indicator. So if you see here on the chart, though, when Bitcoin is trading above the 111, when it retreats into the 111, that's very good buying opportunities. And when it detaches really a long period of time away from the 111 like this, these were very large periods of detachment. It's a good place to take some profit. So if you took profit on the way up here, on the way here, and you bought back in to the 111, you would have been able to take some profit, buy back in, and like this one here, you're taking profit as it gets well detached from it up here, and then you would have tried to buy back in here. And what happens with the 111 is it's a pretty good level. A lot of times if you lose it, you'll bounce right back up into it, and you'll find it again as resistance, and that gives you your opportunity to go ahead and exit. And this is why, again, I really prefer trading spot. But this gives you the ability to kind of ride things out. But happened over here again pretty well, right? This is where I did the best. I exited the market pretty much entirely on this loss of the 111. It was the 120 back then. It was a little bit higher. So the 120 moving average was somewhere over here, right around the same level, I guess. That's where I exited spot largely, right? Except for my bags, I just won't pretty much ever sell. But I bought back in before we hit the 111 because the same kind of principle applies. When you get too far to detach to the downside from the 111, you can generally find a good pattern that lets you know you're going to bounce back up into it. And my play is always to try to play the bounce into it and then to watch what happens. In this case, we bounced into it, turned over, and then resumed back up. So I, trimmed a little bit coming into it, and we started to resume back up. I got back in. Obviously, a great opportunity to buy into it there, and then you wouldn't have caught the tippy top. The 50 would have helped you, catch the top a little bit better. But to catch the top, there's a lot of other things that can help you catch these tippy tops, like derivatives data and percentage detachment from these moving averages and things like that. So, like this one, it was pretty obvious when we were going to roll over here because Litecoin popped big time, and you just know Bitcoin's going to roll over when Litecoin pops like that. So, so other little indicators, but the 111 was a good place to. Now the problem with this 111 hit, I'll tell you, this is why I did not do nearly as good in this whole market cycle as I did this one. I didn't take the opportunity to exit. Let me put this on this brush right here at the loss of the 50, like I told everybody I was going to, and I was supposed to, because I was on vacation, and I was like, I thought I had a couple more days of watching it trade up into the 50 before it rolled over, and it just rolled over a lot faster than I thought it was going to. So I thought at the time I was thinking this is a Wyckoff, distribution pattern. I thought the third would be a lower high and then a rollover. So I thought this price was actually going to do this, right? So I was waiting for that like peak above the 50, not getting close to it. And so I didn't take that opportunity to sell spot like I was supposed to. And then my next thing was to sell on a close and bounce back up to the 111. Well, we never got that. So this is why I wasn't able to do as good in this last round of the market cycle, is this sell-off right here blasted right through the 111 without giving me a chance to resell until way, way, way over here, which at that point, we'd already become so detached from the 111 for so long. I was waiting for a bounce back to 200, which I did get very neutral right into that level. That's how I use the moving averages, right? So when the moving averages are trending downward, it's a downtrend, and I just stay out. I didn't do as good of a job because just because of the nature of I didn't take profit like I should have here. And then when it sold off so hard below it, I didn't get the bounce back off the 200 back into the 111, especially this confluence of 111 and 50. I thought we were going to make it up there, so I didn't do a good job of taking enough profits there. I did take some profits as we made this little false breakout and rollover, right? I did book some profits right there, but not nearly enough. And then when we finally made our way back to 200, I did a really large account reset. But I still only took a percentage off. I didn't take as much off as I should have on that bounce back into the 200. But then we rolled over a lot harder again. So this second half of the sell-off I've not been as sharp. That's for sure. But that's how I use the moving averages. And so now that we're below this, see, when I tried to buy that 37,000 support, I was super on edge because we were already below the moving averages. So it gave me the hint that I didn't like the price action. So what I did is I bought, I don't know if y'all recall, but basically I was vocal buying 38, 37, something like that, 1,000 right through here, right as we came into the support area into that trend line. And when it bounced and started to roll right into resistance, I just did not feel good about that bounce and the headwinds of the Fed meeting. That was the Fed meeting that day. And it was because Powell took the 0.75 rate hike off the table, and the market bounced on that day. But I didn't like that. Like, okay, just because he took 0.75 off the table, it was actually a really hawkish meeting, so I went ahead and got pretty neutral again there. But the reason I kind of also was not really feeling great about that is we didn't quite make it back to the moving averages again, and I didn't want the same situation over here. So I did what I had to and sold 39-ish thousand, and then it just nuked after that. So you guys were watching it. I was watching. We're all watching it just nuke. So since we've broken my invalidation, my absolute invalidation level was 34,000. We took out that swing low. I was just done. I'm done for the summer. It's over. It's cooked. I'm just gonna go relax. 25,000. We're down to 25,000. I have an order. My first order. I'm about to get filled apparently. Kind of exciting actually. My first orders start at 24.6. So I do have orders down here right now. I've been sitting on Gemini waiting for, I don't know, months. Not months, weeks anyway. So since that $34,000 validation, once we hit this wick low and bounced, I went and set some orders between that wick low and the 200-week moving average. And I'm going to show you the CME futures. 24K. 24K is definitely, we're definitely getting 24K. I think we're getting 20K. This is the risk off. The reason I've become way more bearish is just the risk off sentiment in the market. I kept thinking incorrectly that the market was going to have an initial bounce in it, and that was going to give us that really good opportunity to exit in Bitcoin. I kind of started to think kind of later in the game. I don't know how much I vocalized this because I quit doing so many videos. I was starting to look at this. Remember, I had this uptrend channel. I kept saying, okay, I think 72. I did a video. 72,000 was my target because I thought we could get there on the spot ETF approval, which looks like it's not going to happen this year, maybe. But then I started looking at this pattern. We had this weakness down here. As we came into 37, I started thinking to myself, you know what? I wonder if it's just going to give us a higher low and then roll over. And it did, but it was much a lower high. That's a higher low. Lower high, sorry. My brain's still a little bit off here, but it gave us a much lower high than I would have expected. Came a 200-day moving average. Again, those moving averages are just beautiful. So one of my lessons. So let me see here. My son's waking up. Am I waking him up? I'm probably talking too loud, guys. I gotta quiet down. My son just fell asleep. He has a little ear infection too. Oh goodness. All right. So yeah, my first order is at 24.6, and the reason for that first order at 24.6 is the gap over here. I had these on log. I'm sorry. I never use log for trading. The top of this gap, the gap will be closed at 24.6. So that's where my first order starts. So my orders start from the gap. You'll hear my son crying. It starts from the gap down to the prior all-time high. And this has been one heck of a month, man. My poor son's been through the ringer too. He's been sick nonstop. Yeah, so these are my using funds I had freed up and profits I had taken. I'm going to be fully reinvested at 20,000, 21,000, roughly 20,790, I guess. I think I actually placed my bottom order a little bit lower. It's on the weekly. Yeah, I put it on the actual weekly. The last weekly support level is what I put it on. Just in case we got this really, really, really crazy wick low. My last bottom order is 19,128. Otherwise, I'm looking for the resumption. I do have other funds that I've freed up that I'm waiting to put on exchange. That I haven't even put on exchange yet. I'm just kind of passively really waiting for more signs of a bottom being put in. But when we get some resumption of the upside, we pull a pattern that looks something like this over here. I'm looking for this type of price action where we bounce off the 200 for a little bit, finally reclaim the 50, stick around the 50, get it back above it and the 111, and you get this kind of compression of price and get back above it and start moving, get some momentum. Then I'll deploy, find a spot, buy these dips into support that's established, and I'll deploy. So you'll look at this kind of pattern here. I'd be looking for a breakup of the 50, and then that horizontal right there, any dips into that horizontal level to take that outside capital that I'm bringing back into crypto to buy the dips and to ride this next wave of the market. But I'm looking for this sort of like multi kind of month, riding this 200-week moving average for a bit and retaking those moving averages. Get those moving averages at 50, especially getting it curled back up, getting the 111 kind of flat line, the 50 curled back up. That's what I want to see before I really do much of anything. Now, the 50's got a long way to go before it curls back. I mean, it is pretty nuking down right now. So it's gonna take a bit for it to really flatten out and move back up. Well, yeah, see, so we hit that wick low. We got some liquidity. It's gonna bounce. Let's go to like a really low time frame, 1 hour. So yeah, let me just go put what chart am I on? I'm on, what feed is this? This is the index to TradingView index. Let's go to Coinbase's feed. That's better feed. All right, let's put a wick low on that. Yeah, so you're gonna get that little bit of liquidity, a little bit of a bounce, some green coming in here. I don't know how long it's gonna last, but we're gonna get probably chill here for who knows what's going on with the broad markets. Anybody have any news on the broad markets? Chainlink down 50% in the last few days. Yeah, somebody said Chainlink is holding up fairly well. Matt says Chainlink. Yeah, Chainlink's looking pretty rough. I mean, let's go take a look at Chainlink. I did post a Chainlink. Here's my Chainlink. Yeah, it's rough. This is USD. Look at Bitcoin. The Bitcoin chart's what I care about more, right? It's just really rough. The bear market, the last bear market again. I pointed this out, right? In the bear market, Chainlink was gaining strength versus Bitcoin. In the bear market, it's been losing strength, right? So we'll just wait. I mean, he's got to wait. Like when this chart finds a floor and starts to pull, like this price action here, where it's bouncing up, it's above the moving averages are trending back up. They're sweeping upwards. The price is going up and bouncing into those, bouncing off of. So this is what you want to see: up, above, back down, and bouncing off of. Then you start buying these dips. Right, so you buy this dip, this dip, this dip, whatever. Take profit on a big monster move like this, buy this dip. That's why I prefer doing it. So we're just way, way, way too early for me to even care about this chart. Unless I'm shorting it, right? And this, when you get under these moving averages, start the reverse. I pretty much don't ever short. And, I have a few things I don't like. Dogecoin, Solana, I've shorted them. I don't like shorting things, so. All right, guys, I'm going to wrap up. My son looks like he's waking up, and I've talked about everything I want to talk about. Let's just get this ball rolling with going live on Sunday nights. Any questions, any Q&A out there before I take off? I'll answer a few last-minute questions, and then I'll go. If not, then you guys enjoy your night. Thanks, Edgar. Yeah, DXY is breaking through. Is there any other news that I missed maybe out there? I mean, we're probably headed for a 0.5 rate hike. I think that's really what the market's kind of just, it's just risk off night market open because everybody's expecting that 0.5 announcement. So, and one thing I do want to mention on the I'll try to come prepared with some Glassnode charts. I'm going to have Alan on. I'm going to try to start 30 minutes early and then have Alan on for a little bit to talk about a bunch of Ethereum news next Sunday night with me. But the one thing I might try to come better prepared with, I just was looking at the miners, pain threshold and where they need to sell. So the biggest issue. Oh yeah, Celsius with fully halting withdrawals probably. Yeah, that makes sense. I guess people are getting freaked out about. Okay, that makes sense. Okay, that's probably part of it. But the broad markets are weak too. Look, the dollar's got some strength here. You've got SPX futures looking down, Nasdaq looking pretty off here. So I think it's a broad market, and maybe the crypto is off extra because being spooked by Celsius news. With their withdrawals. No problem, everybody in that. So the biggest issue we have, the reason I think this bottoming process is going to take several months, if not through the end of the year, is miners. Bitcoin miners, obviously several of the big ones tried to go with the Michael Saylor model of leveraging public liquidity, so either raising equity or selling shares or the credit markets. And with interest in crypto being down, the ability for them to really raise much money via the public equity markets is not going to be great, right? There's not going to be a lot of interest. And then credit's going to dry up because as interest rates rise, clearly, both creditors have to be more discerning with who they lend money to because lending money means more because it's going to put more of a strain on the lender, the lendee to pay back that. But then also you have just the dynamics of at some point the miners just aren't going to want to take out high interest loans. There's going to be a pain point where all right, it's better for us to sell a little bit of Bitcoin to fund operations than to take out these high interest loans. And so it's, obviously as lenders too, when they look at the crypto market, they're going to be scared. So they're going to want to be charging a lot of interest to price in that risk. So these loans are going to get very expensive. So there's not a lot of opportunity in the equities markets right now for them to raise capital, and there's not going to be a lot of lending facilities available to them. So they're going to have to sell Bitcoin to fund operations to stay open, and hopefully sell a bunch of their miners cheap because I keep checking eBay every day looking for cheap S19 110s is what I'm shopping for right now. Want to buy a handful more of those, but yeah, so I think the miners, what you're seeing here, the miners are going to have to start dumping their Bitcoin at these prices to fund operations. They're not going to have much of a choice, and so that's just obviously going to add downside pressure. There is a lot of really strong accumulation still. I haven't looked at, let me look at my daily, before we get off of here. I think this will be the last thing, unless it's a good question to answer. Let's go take a look at, I'm just going to pull up, I have both Glassnode and CryptoQuant. CryptoQuant's little daily dashboard that I put together is a little prettier, so we're just going to go with them. Let me sign in over here, make sure I'm not giving away any sign-in information on accident. 1 second. Okay. So let's just quickly look at the daily dashboard to see what we've got going on here. OI is so one of the things I'll try to do a whole segment on this about my rules of what I'm changing in my rules to be able to more accurately trade around these markets. One of the bigger things is I am going to put more emphasis on technicals and my moving averages than on fundamentals. I had about 50-50 weighting of the two of them. It's now going to be more like 70-30. But the fundamentals here, Bitcoin exchange, coin's still coming off of exchange. I mean, that's probably people fearing regulation. I've been saying it for a long time. This is as much the trajectory of this coin's coming off of exchange in the long term is still good long term, but it doesn't. There's still the 2.44 million coins on exchange. There's plenty of coins that can be dumped at any moment in time, right? So that's not like it doesn't mean the price can't dump. It only means that the general behavior of the market is more accumulatory, right? People that want to buy and hold. So exchange net flow is still looking good. The derivatives markets, you know, they were largely negative for a while, but OI shut up here, and OI is coming off a little bit. Open interest probably, if we go look at the broad, given where we're at, you know, obviously it hit crazy fervor over here in April, and then again it hit crazy fervor in November. And then again, it hit that $48,000 price point. It really hit a really fervorish peak over here. And then here lately, this little bitty move that we had, people got really leveraged again. I don't know what they're doing. But yeah, this is really rough. So OI needs to get really probably pretty wiped out. Like we've never hit what's kind of spooked me the whole time. I haven't talked about it much, and I should have talked about it more. Was look at the leverage wipeout we had in summer. You know, 2021, that summer 2021 wipeout. We need a setback of OI back to like what was that? A total open interest of 5.8 billion. And before the bull market, I mean, open interest was a couple of $1 billion. So we're up here at what are we at? 10 billion still. You know, 9.5 billion in the heat of like in the middle of a bear market. That needs to come off. That needs to be down at like, you know, maybe 10, 12. I don't know. Not 10, 12. That was 5. It needs 7, 8. Maybe 6, 7, 8. Somewhere in that region too. So derivatives market's driving a lot of this. Driving a lot of this for sure. All right. Just broke below 25K. Yeah. So my 24/6 orders are going to be. How do you feel about eGold? Quick thoughts. Still like them? Yeah, I still like the project and the team. The price is looking gnarly. I have way too much eGold still that I held on to. But I said when I bought it, this was I was going to hold it through the whole bear market. I said it when I bought it. I wish I would have put more. I put some of it into the eGold USDC pool. So I still have it there. When we get this 6 months of bottoming price action, then I'll go ahead and completely empty out my USDC pool and buy eGold with it. But I wish I had like 50% of my coins, my eGold stack, and 50% of my eGold, and 50% of it is USDC in that pool, and then the rest is farming LKMEX. But I've got a good chunk of it in the eGold MEX pool. I have a very small amount in the LKMEX solo pool, and a good chunk of it in the eGold USDC pool. Again, I wish I would have been more 50-50 on the USDC and eGold, but it is what it is. Price is looking pretty gnarly. I will buy more. Probably another couple percent. The one I'm really excited about is AVAX. I'm going to load up big on this. This and ADA. I'm going to reload on ADA. I always said I would. I'm just waiting for it. It's just like I had a lot more ADA over here that I dumped. So I wouldn't mind getting back to the levels I was at, coming into the bull market 2020 as far as the number of coins. So yeah, ADA I'm going to load up on pretty heavy. ETH, I just told somebody today that I'm working with in crypto, 440 to 300 was my price target on ETH. And I know people think I'm crazy. I'm like, I've lived through bear markets. I know what this is like. Things get way oversold, and they hit their, not so much oversold, they just hit their floor price and just stay on the floor for months. That's the way it works. We're going to do the same thing. We're going to hit the floor. The floor might be more like 500 or 600, but it's going to spike down into that 300 region. You better believe it. Or maybe, I don't know if it's 300 per se, but a 400 something hit is very likely, I would say. Is Nancy Pelosi losing money? She's making money, man. As soon as, think about this, the Federal Reserve, I saw this on, I'm sure you've all seen this too, but come on now. There was that, somebody tweeted, the Federal Reserve, board members sold their shares right here to avoid a conflict of interest right before they raised interest rates and nuked the market. You think Nancy was included on that? Cool. Thanks everybody for the last minute questions. Thanks for hanging out with me. I look forward to getting back to doing these. I think, again, this will probably be a regular thing. You'll probably see me take off in May sometime and enjoy part of my summer, and then slowly ramp up as the summer goes on, and we'll get back into the full swing of things in July and August. I don't expect price to bottom out until summertime, right? So maybe it bottoms earlier than that October date would suggest on that, you know, BLX chart. I would not be surprised to see us bottom a little bit before. Kind of what I have on here is just a tentative. Like I said, this is not exact science. This is just a tentative, you know, look at it. But yeah, you know, we're looking at October potentially for $20,000. Maybe it gets there a little bit earlier, but it bounces along that level for a little bit. But and there's not going to be much to do in crypto except research new projects. So we're going to be doing a lot of that. I don't want to put too much out there for two reasons on the researching new projects. Because I don't want people going and buying in now and see it drop down another 70-80% on them. First of all, because it's going to. If anybody buys any altcoins right now, you're going to lose 70-80% like in a couple months. Secondly, I don't know how much I'm going to like these projects until I see how they perform as far as their developer activity and all the core metrics that I watch in the bear market. So it's going to take 2 or 3 months of observing. So I'll start to talk about them casually. I'll bring up a bunch of them that I'm looking at, but I'm not going to make any quote-unquote recommendations or really start to talk any of them up until I see that they have really strong developer activity through the lulls of the bear market. And when I see that, that's when I'll have much higher conviction to say, yes, these projects are great, and they're the ones that'll probably do the best. You know, anything obviously nowadays with meme coins and NFTs and dog coins or whatever, anything can do good technically, but I like to be a little more systematic about it. All right, guys, take care, everybody. Let's throw out some outro Doge. This is my Doge wave. Hold on, my computer moved on to something else here. Is this still Synth Arcade? Oh, it's still the same. I think it's still no copyright, free use. Let's just play these guys. So I've been using this Damon Gaming TV. It's a very small YouTube channel, 7K subscribers. They got some really good stuff they put together. It's all no copyright synth wave stuff. So let's throw this on for an outro music. What do we got here? We are 5 minutes in. The name of this track is Lee Roosevelt. So this is the same guy that does the 1980s soundtrack that I used for my intro. This is called User Friendly. Perfect. Well, let's just go out with that. That sounds great.